What's going on, everyone? I hope you're well and doing great. In this video today, we're going to be talking about a few different things. We're going to start off talking about the dollar, whether or not the dollar is picking up momentum to continue a move potentially towards even new yearly highs. And to do that, we're going to focus in on the two biggest makeups of the US dollar index. We're going to look at the Euro US dollar, and we're going to look at the US dollar Japanese yen. We're going to dig in and see what's happening over there on a technical level that may lead to the next move on the US dollar index. We're also going to be looking at the NASDAQ. We're going to be looking at some important levels NASDAQ is moving into right now. If we are looking into or moving into some type of resistance that might cap this rally. And then we're going to look at probably the best way for the majority of the people out there to make sure that they stay on the right side of the trade. We're going to look at that through the lens of the NASDAQ, through looking at 2000 and 2008. And then finally, we're going to be looking at why Bitcoin is lagging, Ethereum is leading. We're going to look at the relationship of them too. I hope you enjoy this video. If you do, please go ahead and hit the like button. If you haven't already, subscribe to the channel and make sure to include your thoughts below. I hope you enjoy it. Starting off with the DXY. To talk about the DXY, I'm going to talk about its two largest components, starting over here with the US dollar, Japanese yen. And you could see that since that sell impulse that went ahead and not only occurred, but really the sell impulse over there in late July, mid-July, for the first time since, we're seeing a potential trend line break about to occur. And that could signal some further continuation of dollar strength. At the same time, I want to add in for you over here a horizontal line. And you can see over here starting this first touch that occurred. And then this was a lot of noise back and forth. But over here again, late July and then early August, that line has really become the market paying attention to. I do believe that to prevent any type of chop. So I'm noticing, this is quite funny but important. I'm noticing around there as everyone is paying much more attention in their analysis to these CTM inspired trendline breaks, that the market is fluid. And at this particular point in time, I'm seeing across markets that I'm paying more attention to these horizontal levels, right? That happened yesterday on the DXY when I was looking at it. It's happened when we looked at the 10-year and you saw me go ahead and say, you know what? I think that we're entering a period of what could be a potential range. And in order to not get caught up in that range, I'm going to go ahead and just add some lines. Now, I wonder on the dollar here, and you'll see after we look at the euro, maybe we need to go ahead and tighten this up over here down to here. But 1 second, let's continue what we're doing. So I'm going ahead. Oh, and on oils, another thing that we went ahead and we recently added that horizontal resistance to keep us out of the chop. So until the US dollar is able to get above that red line in the sand on the Japanese yen, I'm going to consider this, you know what, better right now, from my point of view, to be out of the chop. At the same time, this line over here, a breakdown below it, below that support, that would signal a continuation of this sell impulse that's in play. Euro US dollar, let's take a look at it also. And again, here's another trend line break that's occurring in the markets. But I think this green line, this line of support, is more appropriate. A breakdown below that support, and then I think we're going to see an extension down of that dollar strength versus the euro. I think that's going to be really appropriately seen in the DXY. Obviously, euro making up 50% of that index. And I think that what we're seeing right now is probably, as we're seeing, it was pointed out, the natural gas, specifically in Europe, natural gas prices rising rapidly again. We saw or viewed really quickly this morning electricity rates in Europe, and energy is going to continue to weigh on the EU and therefore the euro. And then over here on the upside as well, we could see that this area of support, broken support, now holding as resistance, makes a lot of sense at this point. Instead of relying on trendline breaks to kind of zoom out a little bit, I'm seeing with this trend line over here of how appropriate is important. I'm going to also go ahead and remove that. I'm just going to stay on this range and just wait for a breakout or a breakdown. DXY, in relation to the euro US dollar, you could see that I'm saying here, or offering the potential possibility of this support, it breaks down, that we would see a continuation. I wonder, therefore, if this might be a little bit high and maybe market paying attention to that near-term resistance right over there. That would signal the inverse, that breakdown of the euro US dollar, that green line support, and maybe even tighten that up a little bit, just like that. Remember, I'm trying to pay attention to what the market's showing. I'm not trying to make sure that I am right. So then the same thing over here, I have this box, the support coming off of this lower level of support. Is it more appropriate to raise that up off of that line of support? I don't know, thinking out loud, but I'm gonna go ahead with that tighter box. That tighter box actually now resembles closely this euro, and that makes a lot of sense, being that the index is largely made up of that. So there's our adjusted view of the DXY, and it's coming off of looking really at its two main components, the US dollar, Japanese yen, or I should say the yen and the euro. NASDAQ continuing to hold its current breakout. I personally, raising my hand, think the most important line right now in the markets is that pre-low that occurred prior to last week's CPI print. It's over here highlighted in yellow. Let's continue to be aware of that and watch that as a line in the stand. I want to jump over to this view. Before I look at the NASDAQ, just jump over to the S&P 500. And that's because I had the resistance here at the S&P 500, or we've had that resistance here at the S&P 500 where price is currently moving into. If you keep that line in mind while looking at the NASDAQ, and I just go ahead and place, let me zoom out a little bit, and I place my mouse over where the current resistance is, I mean, there's that touch over here. It seems very light. You could see it again over here. This was resistance. After it broke, it became support. It belongs there. I don't have it there. And you could see that the market, after this last breakout, retest, and resumption, is simply coming into an area of resistance. I would say it's a little light, but it makes sense that the market, as it moves into that resistance, is over here either getting ready to pull back, either getting ready to consolidate, or consolidate below that resistance for breaking above it. I think that we're all guilty of thinking that the markets go straight up or straight down. And the truth is that there are often periods of sideways consolidation, and that is extraordinarily healthy for the markets. We are waiting on, obviously, to a small degree, I think, worthy of our attention, tomorrow's FOMC meeting minutes, and then later in the month, Jackson Hole. And the market has to continue watching and being aware of these commodity prices. This is going off the daily time frame. Why you normally see me on the 8-hour. From a trader's perspective, I think it's the better place to be. And just want to point out quickly, as that rally off the March FOMC into early April, that quick and sharp rip was sold, and sold quick and hard. Our preferred settings pick that up on the 8-hour very, very appropriately and quickly. And then at a really good time, as we've done off of our TA like this. This is the NASDAQ over here. Here we got the breakout, went back under. Remember, we came into that local support, and then the second breakout, retest, resumption. So right around here, June 19th, that was really the right time to get back into the market. And then you could see, boom, July 19th, and then that got you back out for that retest. It's even better than the way that we did it discretionary, and then finally back in over here on the right side. I think that the way to view stock market is off of the daily time frame, and I think that the way to view the stock market is for more of an investor's perspective. A lot of people probably within retirement accounts, 401ks, want to know when they should be in the market, when they should be out. Now, we've also looked at this on the 2-day. It provides really good, let's say, signal when you should be in the market and when you should be out of the market. I just want to view this from a very simple perspective, and that is going to be sharing this with you, going back to two of the most popular periods that a lot of market participants look at, and that is 2000 and 2008. And just going back over here to 2008, we'll start off with. You could see how great this keeps you in and out of the market. A lot of people looking for this current rally that we are in to be sold and for a massive leg down. Just look if you were following something as simple as our preferred stock settings on the daily time frame and making sure simply that you are in the market when it's green and out of the market when it is white would have really kept you during this really difficult period to maneuver through on the right side of the trade and the market. And going back to 2000, same thing over here, even better. Just like talk about not having any type of, let's say, complete zen, legs crossed, thumb and forefinger together, eyes closed, and calm as happy as can be. And that right there is, I think, a better tool than majority of participants out there are using or are executing on. And I just wanted to go ahead and just reiterate that also as we move fast and break things often. I want to make sure that we revert back to a lot of things that could potentially offer a lot of help for market participants out there. Jordan, do we think the reason Bitcoin is weak compared to Ethereum is because of the strength of the US dollar, not just Ethereum going into proof of stake? Let me just bring up this chart over here. And so this is being shown because we were watching these two highlighted areas. And as we were in this bear market correction, one observation we were looking at was in the past, we saw that gap closed between Ethereum and Bitcoin. That did not happen here. The gap stayed, right? We were making that observation as it was happening in real time. And then our expectation was that as we saw the market turn, risk rallying, that if Ethereum would outperform. Now, that angle is rather sharp, right? And I think there's a lot of extra oomph in there because of that, let's say, positioning for a potential buy the rumor, sell the news type of event. By the way, we saw through the options market, you see a lot of participants petitioned and taking advantage of it through the options market. Now, not everyone is always right, and it doesn't mean that max pain, which is somewhere for Ethereum around 1350, will be reached. What it could mean is that these people exit the trade early. And again, just to reiterate, my own belief is that actually it's not a sell the news type of event unless we see this current rally that's occurring, whether you look at the equity markets, whether you look at Bitcoin and crypto. If that comes to a sell the rip and the next leg down, Ethereum's going to come with it. I think that if that rally continues to sustain itself, that Ethereum is going to continue to do Ethereum things. By the way, notice off the bottom over here, notice that sharp move also by Ethereum. And then you could see as it came down, I'm not looking for this behavior to repeat. I'm simply showing you what past price action looked like. And that that Bitcoin actually continued going sideways, holding it until they came up. Are you seeing a potential, some type of similarity of that could be in play?